Hello folks, this is Tom Hall with Tom K. Hall Financial Group with an educational economic update for July 2018. In this month's video, I'll discuss some of the major headlines that influenced markets in June. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. We are now halfway through 2018, and the markets have given us a lot to think about this year, including increased volatility. If you recall, January brought new record highs for U.S. major indices. Then, concerns about interest rate jumps reversed some of those gains. Next, equities began to rebound thanks to positive economic data and corporate earnings before the current trade tension brought volatility back to the markets. Amid these fluctuations, indexes had mixed results. In June, the S&P added 0.5%, the Nasdaq increased 0.9%. Meanwhile, the Dow dropped 0.6% during the month. For the year's first half, the S&P was up 1.7%, the Nasdaq gained 8.8%. The Dow, on the other hand, was actually in negative territory, losing 1.8%. From economic data to political updates, much of the information we received last month also painted a mixed picture of current circumstances. For example, unemployment hit the lowest level since 2000, but the latest gross domestic product reading missed expectations. Also, on investors' minds last month was the year's second interest rate increase from the Federal Reserve. When announcing the increase, the Fed gave an optimistic view of the economy's growth and indicated that 2 additional rate increases could occur this year. Throughout June, we also experienced an array of dramatic geopolitical headlines. President Trump met with North Korean leader Kim Jong-un in a highly anticipated summit. Despite the expectations, the meeting had little effect on stocks. Concerns about a trade war, however, weighed down the markets for much of the month. From Canada to the EU to China, trade tension between the U.S. and many other countries continued to rise. The U.S. added new tariffs to goods from some of our largest trading partners, and those countries promised their own tariffs in response. So while the drama affected stocks, markets have remained relatively stable despite the escalating rhetoric. So far, fundamentals have been true market drivers this year. As we move into the third quarter, trade will be an important detail to monitor, but it's clearly not the only one. In particular, corporate earnings will be key. The most recent data indicates that corporate earnings may have grown by 20% in the second quarter, and if the results mirror these predictions, such performance would be the second fastest growth since 2010. Currently, the markets feel like they're on a seesaw between strong economic fundamentals and escalating geopolitical tension. And among this back and forth, we're going to be searching for balanced perspectives on where the economy truly stands and what may be on the horizon. That's it for this month's educational economic update. Once again, this is Tom Hall with Tom K. Hall Financial Group, signing off for the month of July 2018. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 801-316-4110, and we'd be happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as an investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.